friends, this is Sunil Jhaveri, also known as Mr. Bond in the mutual fund industry, welcoming you back to another episode of Kal Aaj or Kal. The idea behind this series is simple: understand what happened in the past, where we stand today, and what lies ahead. Today we will revisit one of the most powerful long-term themes, consumption. I had interviewed Ritesh Pathak from Motilal Oswal, Deputy Chief Business Officer, in October 2025. We will compare the expectations from October 2025 with the reality of August 2026 and see whether the consumption story is still intact. What was said yesterday, Kal, in October 2025, and we will analyze it based on the current performances also. When investors hear the term consumption theme, many immediately think of everyday essentials such as atta, rice, dal, ghee, toothpaste, soaps, and other household necessities. While these products form the backbone of daily spending, they are not necessarily where the biggest growth opportunities lie today. The real consumption theme is driven by rising aspirations, increasing disposable incomes, and changing lifestyles. It is about consumers spending beyond their basic needs and upgrading their quality of life. Today, Indians are traveling abroad more frequently, dining at premium restaurants, purchasing the latest smartphones and gadgets, upgrading their homes, subscribing to entertainment services, and spending on experiences that were once considered luxuries. What was aspirational a decade ago is becoming commonplace today. This shift from need-based spending to aspiration-led spending is creating powerful opportunities across sectors such as travel, hospitality, retail, premium consumer goods, automobiles, entertainment, and financial services. In this edition of Kal Aaj or Kal, we explore how India's consumption story has evolved, where it stands today, and what the future could like as millions of Indians continue their journey towards higher incomes and better lifestyles. Impact on auto sales post GST rationalizations in late 2025, somewhere in September 2025, government initiatives of GST rationalization and its impact on auto sales was, and the answer actually came in very quickly. Lower GST rates made vehicles more affordable. Customers' inquiries surged, and automobile companies reported record deliveries in the festive season of October 2025. It was an early sign that consumers were willing to spend when affordability improved. Tax rationalization and consumption boost due to lower direct and indirect taxes directly increased disposable income. More money in the hands of households means greater spending power. The expectation was that this additional income would flow into the discretionary consumption and support economic growth. There were tailwinds also at that point in time based on good monsoon, lower interest rates, and lower inflation. And alongside tax benefits, macroeconomic conditions were turning favorable. Moderating inflation, supportive policy measures, and improving consumer confidence were creating a strong backdrop for consumption theme. Consumption ultimately follows income. As India's per capita income rises, disposable income increases, leading to higher discretionary spending, premiumization, and greater access to consumer credit. Consumption is witnessing a major transition. The landscape itself was evolving, and there was a major transition in the consumption patterns also. Consumers were no longer focused only on necessities, as I mentioned in the beginning. Aspirational spending, premium products, experiences, and lifestyle upgrades were becoming increasingly important. Fast forward to August 2026. Now let's evaluate whether the assumption we made in October 2025 actually played out, and are they still in play. P2P returns, if you see, it's a very short period of time to compare or comment on the analysis of the performance of schemes, since the launch of Motilal Oswal Consumption Fund happened only in October 2025. However, since inception, over 6 months and 3 months absolute returns basis, Motilal Oswal Consumption Fund ranks number one amongst all its peers, generating 16.35% absolute returns over 3 months and 23.07% absolute returns over 6 months period. Indian consumer continue to spend more than 30 trillion in discretionary spending. Despite market volatility and global uncertainty, consumers have continued to spend on lifestyle products, travel, entertainment, and premium goods. Aspirational and premiumization of spending continues to grow at a robust pace. Consumers are increasingly choosing better products, better experiences, and higher quality services, reflecting rising aspirations and purchasing power. This data also suggests that auto sales from a bumper October 2025 post GST rationalization and beyond validate the strength of consumption. Robust GST collections also reflect rising consumption impact. April and July 2026 collections of 2.42 lakh crores and 2.11 lakh crore were milestone collection figures due to higher consumption and economic growth. The consumption engine clearly remains active. Tailwinds for consumption, they continue. The macro environment continues to support consumption. Interest rates remain stable. Monsoons, despite El Nino effect, is favorable, and inflation pressures have eased despite the Iran-US conflict, helping maintain consumer confidence. Domestic consumption theme continues to be a huge part of our economy. Unlike export-driven economies, India's growth story is increasingly supported by its own consumers. Stars continue to align for the consumption theme. Many of the key ingredients required for a consumption boom are present today. Rising incomes, demographic advantages, urbanization, digital penetration, and easier access to credit continue to support demand. Now, what should we expect tomorrow? Kal. What is the outlook for consumption theme going forward also? Consumption is always on. Consumption is one of the few themes that never truly switches off. The pace may fluctuate, but people continue to spend, upgrade, travel, and aspire for a better quality of life. Consumption may slow down if markets remain flat or negative. That is the counter theory or a counter argument. If markets remain flat or for a prolonged period, investors may feel poorer, discretionary spending could slow, and economic growth may moderate. This is the risk that many market participants are watching closely. However, counter theory to that is that yes, reality is different from the developed markets. Research suggests that stock market wealth has only a modest impact on overall consumption. For most Indian households, spending decisions are driven far more by income growth rather than portfolio performances. The reason is simple. Only a fraction of households own meaningful equity portfolios in India. Equity ownership is concentrated in higher income groups. That discretionary spending does not change with rising better equity market performances or otherwise. The median Indian household still derives consumption power primarily from wages, business income, and agriculture rather than stock market gains. On PPP basis, India's per capita is on the rise. India's progress becomes even clearer when viewed through purchasing power parity. Over the last 2 decades, India's per capita income has multiplied several times, placing it amongst the strongest performers within the emerging markets. What are the other external risks going forward? Global fragility due to burgeoning debt and rising interest rates. No investment theme is without risks. Rising global debt levels, higher interest rates, and financial instability in major economies such as the United States and Japan remain important factors to monitor. Unwinding of Japanese carry trade, which happened in August 2024, can derail global liquidity flows even currently. To summarize, India's consumption story remains intact. Discretionary spending and premiumization continue to grow. Favorable macros, rising incomes, and strong domestic demand remain key tailwinds. While risks exist, India continues to stand out as a structurally strong consumption-driven economy, unlike others which are export-driven economies. Thank you so much. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.